The United States and Japan have just announced a major new trade agreement. This deal marks a turning point for two of the world's largest economies. It's designed to end years of trade tensions and create a more stable, predictable environment for businesses. Leaders on both sides say the agreement will strengthen economic ties and open new opportunities for growth. The main goal: make trade fairer and more balanced, especially for key industries like cars and agriculture. For decades, both countries have debated tariffs and market access. This deal aims to finally resolve those issues. It sets clear rules for future trade, giving companies the stability they need to plan ahead. The world is watching closely, as this agreement could become a model for future U.S. trade negotiations. By combining lower tariffs with a massive investment promise, the deal signals a new approach to international economic policy. It's a shift from conflict to cooperation, with both sides making major commitments. This isn't just about numbers, it's about reshaping supply chains, business decisions, and even the prices consumers pay. The effects could be felt in jobs, wages, and the cost of goods on both sides of the Pacific. Understanding this agreement helps us see how global politics can directly impact our daily lives. The stakes are high. This could launch a new era of strategic economic alliances. Whether it succeeds or fails will shape trade talks around the world. Let's break down what's actually in the deal and what it means for the future. At the heart of the agreement is a dramatic change in tariffs. The U.S. will lower tariffs on Japanese cars and auto parts, a huge win for Japan's auto industry. This makes Japanese vehicles more affordable in America, boosting their competitiveness. In return, Japan will open its market to more American agricultural products, especially rice and beef. This is a long-sought victory for U.S. farmers, who have struggled to access Japan's lucrative market. The deal aims to bring stability after years of tariff threats and uncertainty. By locking in clear, predictable tariff rates, both countries hope to encourage investment and long-term planning. The agreement also looks to the future, setting rules for digital trade. These rules ensure data can flow freely and digital products aren't unfairly taxed. It's a forward-looking framework covering not just traditional goods but also the fast-growing digital economy. The hope is to move past old disputes and build a more cooperative economic relationship. Both sides see this as a win. Japan's automakers get access, and U.S. farmers get new markets. The deal is designed to benefit workers, businesses, and consumers in both countries. It's a blueprint for how modern trade agreements can address both old and new economic realities. But the real test will be how these changes play out in practice. The headline-grabbing feature of this deal is Japan's pledge to invest $550 billion in the U.S. economy. This isn't just about buying American goods. It's a direct investment in critical sectors like energy, semiconductors, and shipbuilding. The U.S. president will have a say in where the money goes, targeting industries vital for economic and national security. This investment is a key reason the U.S. agreed to lower tariffs on Japanese cars. It's a bold new model, linking massive investment to trade concessions. The money is expected to modernize American infrastructure, boost technology, and create jobs. Japan's commitment goes beyond trade. It's about deepening the alliance and showing faith in America's economic future. The scale of the investment is unprecedented, and it's designed to have a major impact on U.S. industry. This approach could set a precedent for future trade deals with other countries. By tying investment directly to trade policy, both sides hope to achieve more than just tariff reductions. The plan is to make the U.S. economy more resilient and competitive. For Japan, it's a strategic move to secure better trade terms and strengthen its partnership with the U.S. The $550 billion figure is what makes this agreement stand out from past deals. If delivered, it could transform key sectors and reshape the economic relationship. But such a massive promise also raises questions about how and if it will be fulfilled. The world is watching to see if this investment becomes reality. Japanese automakers like Toyota and Honda are set to benefit most from lower U.S. tariffs. Their cars will be cheaper in America, likely boosting sales and profits. Investors have already responded, with Japanese auto stocks rising after the announcement. For the U.S., the $550 billion investment targets industries like energy and manufacturing, promising new jobs and growth. This is a major selling point for the U.S. government, eager to show direct benefits for American workers. American farmers also win, gaining better access to Japan's market for products like rice and beef. This could mean higher exports and more income for rural communities. However, not everyone is happy. Some U.S. automakers and unions worry about tougher competition from Japan. The deal tries to balance these concerns by channeling investment into U.S. manufacturing. The final impact on American auto jobs will depend on how consumers and companies respond. The agreement is a gamble, more competition, but also more investment and opportunity. The hope is that the benefits will outweigh the risks for both countries. Only time will tell how the changes play out on the ground. One of the most unusual features of the deal is its profit-sharing arrangement. The U.S. claims it will keep 90% of the profits generated by the Japanese investment fund. This heavily favors America, ensuring most returns stay in the U.S. Japanese officials, however, suggest the split could depend on each country's contribution and risk. The final details remain unclear, and this could become a sticking point as the plan unfolds. The U.S. president will direct where the money is invested, focusing on strategic industries. But many questions remain. Who will oversee the fund? When will the investment start? This profit-sharing model is new for a deal of this size. Usually the investor keeps most of the profits. Here, Japan provides the capital, but the U.S. stands to gain the most. It's a major concession by Japan to secure lower tariffs. The arrangement could set a precedent for future trade and investment deals. Other countries will be watching closely to see how it works in practice. The success, or failure, of this model could reshape how nations link investment and trade. For now, the details are still being negotiated. Despite the fanfare, many experts are skeptical about the $550 billion investment promise. Some call it vaporware, a headline number with little chance of being fully delivered. Critics point to the lack of a clear timeline, management plan, or enforcement mechanism. Without specifics, it's hard to know if the money will ever materialize. Some believe Japan used the big number to secure lower tariffs with no guarantee of follow-through. Economic challenges in the U.S., like high labor costs, could make such a huge investment difficult. The business climate for foreign firms has also become more complicated. Many see the pledge as more political than practical. History is full of ambitious international promises that fall short. Turning big announcements into real investments is never easy. Experts want to see concrete action before believing the hype. The world will be watching for real money and real jobs, not just headlines. The credibility of the entire deal may hinge on this investment becoming reality. Politically, this agreement is a win for both governments. For the U.S., it's proof of delivering on promises to renegotiate trade deals and support American workers. For Japan, it's a strategic move to protect its auto industry and strengthen its alliance with the U.S. Both sides get to claim victory at home and on the world stage. But the biggest question remains, will the $550 billion investment actually happen? The deal's success depends on turning promises into real economic gains. If the money flows and jobs are created, it's a triumph. If not, it risks being seen as just another political headline. The details, how the fund is managed, when investments start, and how profits are shared, are still unresolved. The world will be watching to see if this ambitious agreement delivers real results. Only time will reveal if this is a new era for U.S.-Japan trade, or just another chapter in a long negotiation.